Hello everyone.
Hello everyone, welcome back to another video. We hope you've enjoyed your holidays. Today we're going to be going over Thursday's price action and then going into our plan for NJAT in 2021. Cool, so now I wanted to go into Thursday's price action, just starting with the 15-minute and just looking at what's happened. So let's get the rotate. Cool, so this was an Asian session here, and we can see that prices had this run up. We see a lot of lows stacked together, obviously being liquidity for future move. And then what do we see here? The buy to sell. Obviously, this is the same price delivery as we were always talking about, that range, which is that sideways delivery, initiation, create liquidity, mitigate, and continue lower, which is obviously exactly what we've got here. And obviously that buy to sell being that footprint that we're looking for. So anywhere within this kind of area is where we're looking to sell. So obviously that's buy to sell, bank footprint, 50% is obviously where it's tapped, and then continue lower. But so obviously that gave us our narrative for the day. And obviously as we're seeing liquidity being built up, we've got this sell to buy here, which is obviously where prices reacted from here to create more liquidity for lower prices. And then we've mitigated out of here, which again, I'll show you the 1 minute perspective in a second. But the main thing we want to be seeing here on the 15-minute is just this price delivery, which is that range, initiation, mitigation, continuation lower. And then thinking about OBs, that buy to sell. So anywhere within that 50% or open would have been good areas to be looking for sells. And then obviously looking lower at any sort of reaction points that haven't been mitigated yet. These are going to be points now where price reacts from to create more liquidity to then obviously continue lower. So from the 15-minute perspective, we also have that momentum shift at the top. So again, even though this is the same price delivery and we're just digging more into detail about this range, initiation, mitigation, continuation, which is also that move up, momentum shift to the downside. Obviously you had that break structure there, which would be here, and that becomes that momentum shift. So from bullish market structure to bearish market structure, and then obviously that's where we're just following this down. But
and it's just remembering that when we do have that 1 minute momentum shift, that at that higher time frame point of interest, that price is going to want to target that swing low. This is how we know that price is aiming to take this low out, right? Because that is obviously that swing point. Just to add.
Cool. So then, yeah, so obviously this above here, people might have been saying that they're looking for longs here, but it doesn't mean that liquidity has to be taken now. This is obviously future liquidity. We've got 1 high here, 2, 3 highs. So there's literally going to be a ton of liquidity sat above here. And also this is the daily high as well, meaning there's even more liquidity sat above here as well. But just for that, you just don't need to be, just because there's liquidity built above here now doesn't mean that all this liquidity underneath here is ignored. This is a future liquidity point for that one. But yeah, cool. So going on to the minute chart now. Cool. So now down on the minute chart, we're just going to go over this whole price delivery here. Obviously, we've just seen the 15-minute. This is just a zoomed in version of exactly what we're looking at here. Obviously, with everything drawn up. But this, even starting from back here, so this is something from a markup back here. I'm not sure what day this was, Tuesday this was. But that's that whole sell to buy price delivery, and that's where this is the trade that Chuck's got into for that long trade. And obviously left unmitigated here and unmitigated here. And this is something that we wanted to talk about as well, is price delivery being a fire footprint. So this is what we're looking out for when we come to the chart. We're looking at these strong moves up or strong moves down, and we're looking at ranges, looking at sells to buy or buy to sells. These are the things that we're looking at when we come to the chart. Well, some of the first things that we're looking at, obviously we're looking at liquidity as well, and looking at the structure and so on, and higher timeframes. But when we're coming down to the minute, this is what we're focusing on as well. And then literally just to go into this here hasn't been mitigated yet. So we see that what we do, the sell to buy unmitigated. So obviously now that becomes a future point of interest. And then obviously prices continued higher. It's created liquidity underneath here. And then literally continued higher from here. So we've got liquidity under here. We've got unmitigated price action, not unmitigated, sorry. It's unhealthy price action below. Being inefficient pricing, and liquidity sat above here as well, and obviously the OB that hasn't been mitigated here. So obviously cause for some lower prices there. And then obviously we've had that momentum shift right at the top, which we can see again, that price delivery becomes a little bit more clear now, because obviously we've taken the high liquidity, taken the low liquidity. So now that we know that we're in a sideways range, obviously for the markups for people over the week, when we take the high, when we take the low liquidity, that's just the sideways range, which is obviously our first, one of the things that we look out for in bearish price delivery. So we've got this range here where orders are being stacked, that initiation, which caused that momentum shift. And then obviously this here, we can just see is just liquidity. We've got these equal lows stacked underneath here, lows stacked together, being more liquidity sat underneath here. Obviously that sell to buy is what price has reacted off to then create more liquidity to obviously mitigate here and then continue lower prices. So from this point here, after price has taken all that liquidity out and it's mitigated the 50% of this sell to buy OB, we're literally just looking now at what's happening within price. So again, we've got range, initiation, mitigation, continuation, and this is obviously to just push higher for that buy to sell in the 15-minute. And obviously we can see we reacted literally perfectly off the 50%. And then digging into that, so obviously now we've got liquidity sat underneath here, we've got OBs that we could aim for, and obviously we've got that swing low that Chuck's just mentioned there, which is obviously the target once you've had that momentum shift at the top. So now let's dig into more details. So now it's more for me when we understand the direction, it's more just about following the OBs, following that buys to sell, sells to buys, following the mitigation to mitigation. So obviously that'll be the first mitigation there, which we reacted from. So that's that buy to sell, which is this, let me draw it in. So obviously we got reacted here, buy to sell, and then this is that mitigation there, buy to sell. Again, creating that footprint. So that footprint that we're looking at, buy to sell, and obviously mitigation continuation. And that's the footprint we're always looking out for. So this is that whole buy to sell, obviously reacted here, and this becomes a buy to sell. This OB here becomes a future point of interest because we see it was never mitigated. And then obviously we'll move into that and talk about this liquidity in a second. But then we go into another range. So this is quite important as well. So when we've, let's say we're looking up here for this OB, but then we also notice that price has gone into a range. So we've taken the low, taken the highs, we're in a sideways price delivery. Price is stacking more orders in this range now. So this is kind of our new area. This is a future point of interest, which we're not really focused on anymore. And we can see that price has created a new range, which is essentially more orders being stacked. So again, if they're going to buy to sell here, this high is always going to be protected. They're never going to push it higher, which obviously means this is for the future. And we can see here as well, just neaten this up. You can see here as well that all these highs have created future liquidity, being that diagonal liquidity above here. Above all these highs is liquidity, and that's obviously to mitigate out of this OB and some future. So you already see now that price is creating that future liquidity for this move. But then looking at more, again, price delivery that we always look at, range, initiation, mitigation, continuation, lower, exactly the same price delivery. And obviously we have that target being that swing low, which is down here, just underneath. And then this low here now becomes liquidity for that mitigation. Obviously support and resistance traders are going to be looking here, being that swing high as they know it to be, and looking to sell at these points and obviously just getting taken out. But we know the last buy to sell, which is that push up before that initiation, causing a breaker structure low, creating that strong high, is where we're looking at price to come back into to take our selling opportunities. So that was a great play for, I think it was overlap in here, but that would have been a great play for overlap. Again, this is just a range, sideways price delivery, initiation of lower prices, and obviously we'll come back in mitigation and continuation lower. But we're just taking that whole buy to sell logic of how banks get into the market, the whole buy to sell being that range that we're using for that lower prices. So that would have been a perfect entry there, either at the open or 50%. For anyone that caught that, that was a really, really nice trade. And obviously this liquidity here being built was for this mitigation. And also again, so if you missed that, let's even dig into this now. So if you did miss that first opportunity, now we're looking at what's the opportunities that we can get into on the way down. So continuations that we could look to get into. So obviously from this mitigation here, now what we're doing, we're following the money. So again, buy to sell, mitigate out 50%, continue lower. And again, buy to sell, mitigate out and continue lower. And it's just going to be the same thing every single time. We went into another range here, NJAT price, mitigation, continuation lower. doesn't always have to mitigate from the top. Essentially, this is a new buy to sell, mitigation, continuation, lower, and then money's moved from there. So these are your opportunities to get involved. If you missed the one from the top here, you would have seen that momentum shift, which we got at that point of interest. So that would have been the next opportunity that you could have got involved in, which is here. And then placing your stop either above the high if you want it super safe, or again, literally again above the high. But then you've got that buy to sell. So this would have been a second opportunity to get involved, and then a buy to sell, another opportunity to get involved here for that sell to the downside there. But then again, if you've missed that and you see that price has taken all this liquidity here, reacted off this sell to buy at 50%, and then obviously that's inside bar there being on lower time frame, being a range. So again, bearish price delivery, initiation lower prices, create cause as you move up, tap the open, react, create a low here being liquidity, and then we've got mitigation of 50%, and then we've had that smaller momentum shift, which move all this, you can see that again. So we've had that smaller momentum shift, so we've got the move up, mitigate open, reaction, mitigate 50%, have that momentum shift on the smaller time frame, and again, that's another buy to sell that you can get involved in here. So even if you missed that one here at the 50%, or even the open, then you've got another opportunity to get in at 50% here. And then again, buy to sell, following the money down, mitigation, continuation of lower prices. This is going to be the same every single time, just following the money from a range. So obviously when we have that range is when they're stacking the orders. If we're getting moves out like so, causing obviously break of structure, and we're coming back in to mitigate out of positions, these are then buy to sell footprints again that you can look to get back into. So again, it's exactly the same, just range, initiation, mitigation, continuation, and obviously the same thing's happening just over and over again to obviously get into positions.
Especially when you're understanding that the BFI intentions are now to initiate lower prices. Essentially what you're doing is trading along with that intention in price, and then you're following that trend move away. And every time we are leaving those ranges, this is our next point of our next points of interest that are being delivered as we move away. And all we're trying to do is just follow that. Sometimes you're going to catch an entry from here and then be stopped out because you got in too early, but then, you know, someone else might catch an entry from here and get into that trade. But it's both of these perspectives are both correct, because what we're doing is trading with that intention for lower prices. So we're you know, very confident, and we're understanding that our stops are very safe when they're left in, you know, certain areas. Yeah, but as I said, we're following the intentions here. So once we have all of this understanding, it then just becomes about where's those ideal entry points, which is obviously what Burton's going over now.
So now obviously once we've got into any of these positions here, any of these ones here that you've got into, where are we looking at for targets? Well, obviously we've got this OB that hasn't been mitigated here, which obviously becomes a reaction point. Let me try that again. This OB here within this range, obviously sideways delivery, initiation, there's been no mitigation, which is obviously that A to B, B to C, C to D. But there's been no mitigation there, which means now this is left unmitigated, becomes a future reaction point, which obviously we see here reacted off the open. That reaction was to push up, take all this liquidity and mitigate out of this position within this larger sideways range. So again, we got range within range. So obviously we've got a larger range, and then right at the top, we got that smaller range before the initiation, which is exactly what this is here, essentially smaller range within a larger range. And obviously that's our mitigation point, but we always have to ask ourselves, what's it reacted off and why is it reacted off here? Well, it's reacted off here because we've got no C leg. So we've got A to B, no C to D, which obviously that mitigation that we know as, which obviously became that future mitigation there. So the future reaction to off this OB within the buy to sell delivery here. So that reaction created more liquidity because we've got more liquidity stacked underneath these lows, which has obviously been created off that mitigation. So obviously giving us cause for lower prices again. Obviously thinking about structure is very clearly to the downside. So obviously we're looking for sells, and then we've got liquidity stacked underneath here. So we see the reaction caused no swing breaker structure. It was just that mitigation and then continuation of lower prices. And then underneath here as well, we've also got a sell to buy, which reacted off something on Tuesday, I'm pretty sure. That was Asian session trade that I took that became the future POI, which is obviously what Chuck's took in, I think that was on Wednesday, entry in here. And then underneath here, there became an OB that wasn't reacted from, which again was just reacted here. And that created, let me draw a straight line. That created that future liquidity underneath here, underneath this low. I'm pretty sure that's the swing low as well. Obviously liquidity underneath here, that reaction, lower prices. Yeah, there we go. So obviously that created that future liquidity to then obviously get runs. So even if you had missed any of these positions in here, move this out. Even if you had missed any of these positions on the way down that you could have taken, we've got opportunities to take more. So again, a buy to sell, mitigation, continuation lower, obviously aiming for that swing low and that cause that's being created for lower prices. So there's just so much opportunity to get involved in the move, just understanding where your reaction points are, which is if price doesn't create a interest, we've had that momentum shift up there, so we know that price is aiming for the swing low. This just then becomes reaction, create more liquidity to then run in the future. And obviously reaction was to mitigate out of this position here to then continue lower prices. So every move has its reason. It's just about finding that reason for the move. And obviously that's our job as traders. So
and just to add on to a few other bits that I think worth mentioning. So when we talk about observation, we're always talking about observation, and we should always be observing. When you're looking at these reaction points, right, start to understand what happens at a reaction point. Because what you will tend to see is that we'll rather move away with a lot of aggression, or we'll move away in this kind of sideways delivery, and then we see the aggression, right? For me, what I see this to be is obviously stacked liquidity for a future price move when it's coming, obviously when higher prices are being initiated. So when we think about just this little section in here, and that we had this reaction, this drop, and then this range, right? What do we know is happening at either side of those ranges? Either side of the range is liquidity is building, right? And then we get that initiation away. So if we look back again, and then we're seeing price delivery like this, can you see that how they're stacking, how they're essentially showing us that now there's a lot of liquidity stacked above this area from how price has been delivered away from this reaction. They're very close anyway, so we can obviously just assume we've got equal highs here, but more importantly, what I'm talking about is paying attention to how price is reacting at these points, because what we're doing there is training our eye, training our understanding on what we can expect when price is reacting off of these points. And then I hope that was clear. My second point is here we can see we've got that contained price, right? So price is between this swing point and this swing point. Notice that as price is moving away and it's leaving these causes or these liquidity points, notice when price is coming back into it, how price is using that liquidity that is over to the left and what it's leaving behind. And essentially what we're seeing here in this type of delivery is them clearing this entire range of its liquidity, right? If price was just to do this and completely drop below this low, right, we can assume that there is not as many orders in this move than there would be if price moved away more in a sideways type price delivery, because we understand that when price is moving sideways, this is when orders are being initiated. So it makes sense then that from this drop, we're seeing sideways price delivery come into the market, because this is the BFIs adding to their positions as price is moving away for them intending to take this low, right? So it's, again, just trying to show you how they're clearing this entire range of its liquidity as it's moving out of this range. And it's something you will see all the time. definitely something to pay attention to. But again, just more points on how you can observe with a bit more detail. But yeah, hope that makes sense.
Cool. Yeah. So I mean, again, this is all the stuff that we always talk about anyway, being price delivery, all the concepts that we use in order to place trades is obviously you're looking at structure first, price delivery, which is again that bullish and bearish price delivery, and even something to even note here is price is always going to go from a range to a range. So there's always going to be from like a bearish price delivery to a bullish price delivery. So there might be like a range here that's unmitigated, this initiation up, and price is always going to react off something within this range. So you see this move down reacted off this range here. This is a whole sideways range here. But that sell to buy mitigation here then reacted off something here to then move higher. And then what do we see after that reaction? We see another sideways range, initiation, mitigation, continuation of higher prices. So it's always going to go from range to range, essentially. Range, initiation, range, initiation, and then we just look back within that range to see the last sell to buy or the last buy to sell, and then that becomes our point of interest. That hasn't been mitigated. So even within this sideways range here, we have a smaller sideways range, initiation, mitigation, continuation of higher prices. So what's the intention of this move up? The intention, future liquidity that we have stacked underneath these lows.
Exactly.
So there's always an intention, there's always a reason for the move. It's just our job to try and find that reason and then to capitalize on the move that's created.
And it's all being built from this narrative and this understanding that we're having in the charts. It's not purely technical, because you can definitely apply the technicals, but then you're gonna lose a hell of a lot of trades. And it's because the reason why we're not in that position is because we're understanding the narrative, the logic, the full picture of what's happening, understanding why we would see this type of reaction based on what's left. Understand why we're seeing this swing back into mitigate, and then this reaction caused here, right? Just with that understanding alone, now I'm in a position to say, well, I want to take continuation trade short. And now if I'm looking at the edge of all of the ranges that are being created and saying, right, if I had taken a position here, what would be the outcome, right? More often than not, you're going to be on the right side. You're going to be on the trades that go on to bank you that percentage. And that's just purely based on understanding the intention, the direction, and then trading along with that, right? So if you're just trying to apply the technicals, but you don't have that full picture or understanding why this and why this has happened, then are you trying to buy every single, right, low reaction point that we might see and being on the wrong side of the market? Well, if that is you, then you just need to understand all you're doing is playing reversals when you should be playing continuations based on what's happened up here.
Yeah, I mean, if you do find yourself doing that as well, just focus more on momentum shifts at higher time frame points of interest, and then watch how BFIs are initiating positions. So if you are finding that you're trying to catch these reversals every time at each of these lows or any of these lows underneath here, then just go back to momentum shifts. Think about where you are on the higher time frame, hold buy to sell, come back into that, mitigate it out. Then that's created our next range, initiation, mitigation, continuation of lower prices. Because you don't even have to catch it here, don't have to catch it here, you don't have to catch it here, here. Any of these places, you can catch it here and still make a 1 to 20. Like it's literally just about your risk reward. I think this run for like a 1 to 40. Any of these would have been like a 1 to 35, 1 to 30, even this here, 1 to 20. There's so much opportunity on the way down. You don't even need to force getting in right from the top.
Exactly.
Or any of these, and you don't even have to be worried about any of these. All you need to be worried about is when you understand the direction. After we've had that momentum shift, you're now looking for sales. You can take buys. You just got to know that they're against the momentum. So as long as you know that they're against the momentum, now you understand that you're going to want to take profits a lot quicker. But again, just going back to what I said, once you've had that momentum shift, now your idea is to just find bearish price delivery. So range, initiation, mitigation, continuation. This is how they're going to get into the market. This is how they're going to add to their positions. This is what you should be focused on after the momentum shift. Any of these points here are either liquidity or reaction points to create more liquidity on the right side. So these are liquidity to run, or these unmitigated OBs, unmitigated ranges, are for
initiate
reaction to create even more liquidity, more positions in the market, to obviously then get run. But, I mean, it's just keep it simple. There's no need to overcomplicate anything. This is just momentum shifts at higher time frame points of interest, and then training your eyes to understand where BFIs are getting into the market, and it's how they're getting in is the range, initiation, mitigation, continuation, and then just obviously follow the mitigations down. Buy to sell, mitigation. This is future POI. Again, in here, buy to sell, mitigation, reaction to the downside, buy to sell. So obviously we're just following the money here every time. And that's why you always.
And this is why we're stressing with observation, because, you know, if you just take trading out, like actual placing trades, you know, long or short trades out of it, and you're just talking about, just like how Burton's talking now, and just talking through price delivery, right? You will be surprised how accurate you can actually be, right? And this is where we were surprised. And then obviously you just have to layer the entry techniques on top. But just by thinking about observation alone, we can show ourselves, train ourselves, right? Build confidence and understanding how price is delivered over time. Right? And this is the power of observation. What Burton's literally talking about is things that he's observed, that he has an understanding and logic behind for the reasons we might see that type of delivery. He's applying all of these things together to understand what price is more likely to do. And then we're trading along with that understanding. It brings great confidence. And for me, this all starts with observation, right? And it's observing with no bias, not saying that you know or you don't know. Because if you come to the charts and you're trading and you're not sure what's happening, that's okay, right? Allow time, allow for price to be delivered to gain an understanding over time, over that session, or maybe the next session. It does only because you haven't placed a trade, it doesn't mean you've lost out, right? There is no loss, because there's only gain when you're understanding more or gaining an understanding of something you don't understand. And this is why we don't want to look at trading from a perspective of I just place trades and that's where my success comes from, right? Trading's a lot more than that, and success comes from multiple places. One place it comes for us, personally for us, we get great satisfaction out from marking up and understanding price delivery. The trades themselves are just like, you know, the icing on the cake, or us expressing our ability and our skill, right? But where we find our success is actually following, you know, this price delivery, these momentum shifts, these mitigations, and building confidence to say, yes, we understand what's happening and we can trade along with it. It's a process, as you guys know. Yeah, but it all starts with, you know, a strong skill of observing. And this essentially will train you everything exactly what you need, right? In terms of what you need to understand.
Every single one of these moves in this market right now, every single move here can be understood. So it's literally just about finding out why, and this is literally what we're saying to do, as in marking up at the end of the day, finding out the reasons why this reacted here, or this reacted here, or this reacted here. This is literally what we've done, and that's how we've reached the levels that we've got of understanding in the market, because all of these reactions here, we drew on every single reaction on this, on literally everywhere. Where this is reacted here, we drew this on here. Why is that reacted here? And we ended up with just boxes everywhere, just literally just boxes all over the screen of reaction points, future reaction points, for example. Why did that react off here? Why didn't this react?
Yeah, why didn't it react as well? That was the biggest question.
What's underneath here is that sell to buy that hasn't been mitigated yet. So now this low now becomes liquidity, and that's why we see that run all the way through, reacted off this underneath, which is that OB, and obviously that created that higher price to react off this buy to sell. So it's not about this didn't react off here. Why was my point of interest not right? Well, you can figure it out. Think about price delivery and think about the variations of price delivery. Let me just draw one in now. A variation of price delivery where, let me move this up actually so we've got some clear space. Think about the variations of price delivery inside that range. If there's a sell, let's say this is a sell the last sell candle before that initiation that's caused the break of structure. Now, what they're going to try and get people to do is buy at certain places that they can create transaction areas. So if this is your sell before that initiation, then to create a low here that doesn't mitigate before that initiation higher is now creating a place where people are going to be looking to take buys from or breakouts from. So then obviously, if that's just above your mitigation, that's perfect. So many times now we see a range, a push up, prices come back and then initiated, and that becomes that liquidity. So if you ever see that a low or a high just before your mitigation, that's liquidity. And that's literally exactly what's happening. What was the one we was looking at here? That's literally exactly what's happening here. Move this in. This low became liquidity for that sell to buy. There was no seed. This seed came into this whole sell to buy, but on the minute chart, we can see that that's a last down candle before initiation. Price never came back. And obviously that's what's from in the future. Now this low just became that liquidity. Liquidity stacked just above that mitigation to create a transaction area, mitigate out of their positions, push higher. Obviously mitigation to mitigation, it's always happening. So there's obviously buy to sell, mitigated out of this, sell to buy, reacted to push up into this one here. So then every single move now becomes understood. Every single move becomes understood. This range in here, sell to buy, mitigation here, create higher prices. This wasn't mitigated straight away because that was a mitigation for the future. Why? To mitigate out of this, buy to sell. So again, that just, it's every move has its reason. You just got to find out. Again here, sell to buy, mitigation, continuation, higher prices, create future liquidity above, right next to the daily high, which means there's literally just going to be a ton of liquidity above here now.
And when we say, when Burton says find out, what we mean here is by using the things that we show you, that we mark up daily, and then using those interpretations for yourself to try and build a similar picture that we talk about, right? It's not a case of, I've marked up, I tried to take this trade, but it lost, or, you know, I would have taken a trade here, but it lost, or I would have taken a trade here and it won. It's couldn't care less about the trade, right? Because opportunities are going to present themselves, you know, quite easily. Where it starts from is the understanding of what we're seeing. And by going into that much detail, I mean, you don't have to every day, but let it be your intention to go into as much detail as possible, because you may not understand today what you're doing or the reasons behind everything you're seeing, but what do you think is going to happen in a month's time, right? And then 2 months time and 3 months time? How much information, detailed information, are you going to be able to capture over your day of markup or your session of markup, right? It's powerful information and it can do a lot for you. But if you're only trying to scrape the surface on marking up and gaining that detail, then that's the results you're likely to see, right? We get the results. I mean, you know, you see us trade, but we're not even trading at our full potential, right? We're very much happy with our process and it works for us. But there's loads more that we can give, and that's obviously what 2021's about for us.
Every single one of these moves, every single one of these mitigations in here, we're going to be getting involved in. We're going to see us in every single one of these.
There's going to be
mitigations here,
entry after entry after entry,
here, all the way up until that momentum shift or till the target, for example. We're going to be in every single one of these. That's our plan for this year. And on the way down, every single one of these moves here, we want to be in on all the way down. So just think about the positions that you're seeing now, which are like 1 to 10, 1 to 15, 20, 1 to 30s, even 1 to 40. They're just going to be doubled, tripled, quadrupled in the same move. So it's just that's our goal for this year, is to be able to, and obviously to share that with you guys as well.
With all you guys, yeah, especially. And that's what's unique, I think, about NJAT, is that you're not just getting a service, or you're seeing us, today. You're going to be seeing us improve tomorrow and the next day and the next day and the next day and the next day. And that's how it's literally been since the start of NJAT. We've kind of doubled our growth, quite easily, just by being able to explain to you guys what we're doing. And now that's brought us more information, more understanding, where we're able to see more opportunities. And now we want to get into those opportunities. You guys are going to see how we're doing it. So it's just a win-win for everyone. And we're not here to just be some random smart money trading course. We're here to really set the scene with what's actually possible in these markets. And we're not here trying to broadcast it to everyone, right? We're broadcasting it for ourselves, but if other people have an interest, then obviously they're gonna be able to reap very, very similar benefits. So you know, this is why I say, like, you have to be proud of yourselves for the position that you guys are in now. You know, I wish I was in this position years ago, being able to learn from two people who are actually doing it and who actually want to improve themselves, not just selling content and garbage to keep people into a mentorship. Right? We're not marketers, we're traders first. We're not mentors, we're traders. You know, we're not educators, we're traders, and this is who we want to be, and this is exactly who you're getting every single day when we post.
Yes, so that was our quick review of Thursday's price. I mean Wednesday, Thursday's price, the potential opportunities and the price delivery and understanding that we have of these markets. Obviously, we can go in tons of detail about each mitigation and so on, but the overall picture here can be seen pretty well. And obviously, just to look at that on the M15 as well, which I think looks a lot cleaner. So this is why we use our timeframes as well, so we can understand what's happening. So obviously we see all that liquidity. Sorry, let me do this in red. So we've got all that liquidity stacked underneath here, all the liquidity underneath here, which is obviously what we've just marked out before. We've got this unmitigated range, which became that reaction point here. So again, just using your timeframes and just this, again, I said into the group, this is what I do. I put minute on here, 15-minute on here, so I can see both at the same time. It's nice to be able to understand what's happening on each time frame. But again, sell to buy, mitigation, this is the last point that we see of mitigation before prices move higher. So obviously then it's just an easy point of interest, last sell to buy, which is obviously what prices reacted from there. And then we see this is a whole sideways range, initiation, mitigation, continuation, lower prices, which can be seen. And again, even here, buy to sell, mitigation, which is obviously that 50%, this whole buy to sell, mitigation, which we see that wick there, which was that minute OB that was unmitigated. Obviously, we see these three highs here, 1, 2, 3, which becomes future liquidity for that mitigation out of that candle. And then obviously prices just continue lower. Again, range, we can see buy to sell, mitigation in here. So it can all be seen on different timeframes. So it's good to be able to see these things on different timeframes. And remember, I said before, in the markup that we use, the main timeframes that we use are literally 1, 5, 15, 30 hour, 4 daily, probably even 12 hours as well. I take a look at, but these are the main, what quote unquote main timeframes. And we're only saying main timeframes because strong highs and lows can be seen on one of these timeframes, which means you won't miss it. So strong highs and lows can be seen on multiple timeframes, meaning that if you're on the minute, you can see a strong high or strong low on the 5. You can see that created on the 1 minute. You can see it if you're on the 15-minute, you can see a 30-minute strong high or low being created, and a 5-minute or a 1 minute, for example. So you'll be able to see them on multiple timeframes. These other timeframes, the 2, 3, 4, 10-minute, 8-minute, whatever other timeframes you want to use, are just refinement of these order blocks. So that last sell to buy, where's the full body, where's the better looking one on what time frame, which one do you want to play? That's what we use the other timeframes for. But the main time
is to get an understanding, as Burton said in his markup, right? It's to all our timeframes are here for the same purpose, and that's to give us, that's for us to be able to gain an understanding of BFI intentions, so we're able to follow along with confidence, right? So me and Burton, we use our time frames slightly differently, but the intentions are the same, right? It's to get for me to have an understanding, for him to have an understanding, and you guys, you need to do what you need to do to gain that same understanding. And what we're trying to tell you here is how we do it and how you can best have success at that. And I think it's as Burton said, being able to see those strong highs and strong lows on those main time frames is what's going to be able to guide you to building a stronger and a greater understanding of what's happening. It's a massive tip, which I hope you guys are being able to utilize.
Very strong. But yeah, cool. So that's literally our review of Thursday's price. Obviously, let us know what you think about, or even send us in your markups of Thursday as well. I think some of you had, which you're going to go over tonight. and have a look at. But yeah, next we wanted to talk about our plans for NJAT in 2021. So we've got some interesting changes that we're going to be making, which can obviously benefit all you guys.
So 2020 ended really well for us. And obviously it was the year we kicked off NJAT. So for 2021, we wanted to kind of sit down, think about how we want to take things and organize things in a better structure than we currently have. So what we put together is a 2-week focus plan. And what that essentially covers is we will release a topic on over the weekend. And then from that drop, 2 weeks, we're going to focus on that one topic. So our first topic will be OB and variations, which will run, of course, on a 2-week focus. That will be released on Sunday the 10th. And essentially what we mean by this is for the next 2 weeks, we'll focus on OBs and variations. So all of our markups that we'll be posting daily, the markup discussion video that comes out over the weekend that will cover our trades and highlights from over the week, or it will cover the member markups that you sent in. But essentially, whatever we cover, whatever video or piece of content is released over those 2 weeks will be focused on OB and variations. And then obviously once that 2 weeks has passed, on that second week, on that Sunday, we'll again release that next topic for that next 2 weeks focus. And what our goal is here is to try and give you guys something to focus on, to get good at least to spend, a good amount of time, which is we feel 2 weeks is enough time to focus on that one topic, and kind of cover all the questions, all the, whatever variations we get over those 2 weeks will be covered in detail. And it's how we think we can kind of bring you guys value in the best way, understanding that there is obviously a lot of topics that we discuss, and having a skill, a high level skill, is knowing those topics in quite a lot of detail. So this is our approach in 2021.
So we wanted to as well, so apart from that, another video that we're going to do as well, so every bi week we're just going to again do what we normally do with the reviewing the market and reviewing your markups. So essentially you're sending the markups on that Friday, and we'll review them for that weekend. So let's say, just as an example, our week focus is OBs, then when you send in the markups, obviously make them focused on OBs as well. And then obviously we can give you more detailed feedback. So you're essentially getting 2 weeks of feedback on that current focus for that current week.
Exactly.
And we think it's a good idea to really focus on that instead of trying to focus on everything all at once in the market discussions. Really have a focus so that you can see where you need to improve, and then obviously you'll get more feedback for the week later.
And we'll also be adding in a Q&A section into our videos. So obviously we do get a lot of the questions, and obviously some of them are the same. So we're hoping that with these this Q&A that we can kind of answer questions more publicly, so you guys can all get the answer. So hopefully that will obviously help everyone out. And then the last thing,
Slack. So we plan to open something out so we can have more of a discussion. I think me and Anton have both been me and Chucks have both been talking about this one for a while now. We have a lot of like-minded people that are members, so we just thought we might as well just open up a Slack channel and we can all talk in there. But it's all going to be trading related things, so all markups related, all trading related. None of the chit chat that's in most communities that we've seen. We don't really want to create something like that where there's just loads of chit chat about what you're doing this weekend, or you've seen this person, or so on and so on and so on. We just want to keep it very trading related at the moment. So anytime that we're going in there, it's to learn and understand and obviously communicate in a trading way. And we think that that's going to create a nice kind of team environment where we're very focused on what's currently happening and progressing together in trading.
Exactly. And we're not trying to, you know, post upcoming trades that we're looking at. We don't expect you guys to do the same thing. As I'm sure you guys have seen, that we've stressed before, is that trading is an individual game. So we don't want to bring about this opportunity for everyone to, you know, talk, to be moving down a path where, you know, we're all really trying to help. We want to help each other, of course, right? Information can be shared, but you have to take responsibility for your own trading. So that means that your markups should represent, you know, you and your understanding, not trying to, you know, copy anyone else or you know, I hope you're getting the point, right? We don't want to create this place where we can just have meaningless discussion, or you come to because you're feeling lack that day and you want to tell everyone that, you know, you've had a bad day. It's not that type of place. We're only here to bring good intentions and keep the positive upbeat. To keep the message upbeat and positive. Again, just as you guys have been doing already. So we just want to continue that into the chat. But again, if we feel that things are going a bit too far left than we want them to, then obviously we'll let you guys know. So yeah, just making sure that that's clear for everyone.
And then the last thing was 2-to-1s. So something that we've been thinking about for a while now. We just wanted to get everything in order before we actually done this, but we're now going to open up a 2-to-1. So obviously you'll have both of us on a call for however long it takes to go through whatever you're struggling with or want more feedback on. And obviously you can book us in for a slot, and then we'll take you through whatever you need, essentially.
Exactly.
But yeah, that'll be the 2-to-1s that we're going to be opening. We'll announce more of that over the coming weeks, but again, just to let you all know that we're going to be doing that.
It's coming, indeed. And then apart from this, we're looking to make some kind of platform changes. So we just need to kind of do a bit more planning from our side. But yeah, kind of towards the end of this month, into the rest of Q2, yeah, expect some changes, just so you're all aware.
But cool, unless that was anything else,
that's all
will
from me.
be everything. So again, thanks for watching, guys, as always. Let us know your takeaways from today's video. Let's have a focused week and a strong start to 2021. Thank you very much, guys.
Yeah, thank you all. Speak soon.